Hello, my name is Eric Levinson, Head of Business Development for VinaCapital. Welcome to day 2 of our investor conference. Last week on day 1, you heard from VinaCapital Senior Management. You also heard from the Chief ASEAN Economist and Frontier Market Strategist from HSBC, and our own Chief Economist, Michael Kokolari. If you missed last week's session, it is online at VinaCapital.com. I would encourage all of you to listen to it. It's fantastic. It's about 90 minutes in total and gives a great overview of the macroeconomic environment in Vietnam. Today, we're going to focus exclusively on the VinaCapital Vietnam Opportunity Fund, called VOF. At the end of September, the fund had over $930 million. It trades on the London Stock Exchange and is a FTSE 250 company. We are joined by the Chief Investment Officer, Andy Ho, and Portfolio Manager, Con Vu. Now, Andy, some of the folks may not have tuned in last week, and so they missed kind of the macro outlook. Would you spend a couple of minutes on kind of what is it of the landscape of Vietnam today?
Well, thanks, Eric. Happy to do that. I think Vietnam is in a very unique situation. The government's done a tremendous job managing COVID. At the moment, we have less than 1,200 cases, and the economy is growing. Unlike some of the other economies around Southeast Asia, Vietnam's poised to grow about 1% to 2% this year, 2020. We're also very fortunate to have a currency, the VND, that's very stable and possibly appreciating against the US dollars. That's very important for foreign direct investors like ourselves and foreign indirect investors as well. And so all in all, I think we're in a pretty unique situation, and I hope 2021 we'll see Vietnam go back to growing at about 6 to 7% pre-COVID level again.
Interesting. Now, COVID, I want to make sure we don't spend too much time on it because it's, we've written a lot about it. There's more information on our website, but can you give maybe some perspective for those folks that haven't followed exactly what Vietnam has done, and I guess has kind of the way Vietnam has handled COVID, has that actually changed the opportunity set for you as an investor?
Yeah, the government has been very restrictive when it comes to COVID, and they're very good at contact tracing as well. So if you're a patient, F0, if you will, you're in a hospital, obviously. But if you have been in contact with a patient of F0, you're F1, you will be asked to be quarantined in a government-controlled facility, and that's for 14 days. And if you travel into Vietnam, that's if you're allowed to travel into Vietnam. At the moment, Vietnam isn't allowing commercial flights into the country at the moment. But if you are able to travel in for whatever reasons, probably for humanitarian reasons, then you're asked to be quarantined in a government facility, or if you're lucky, you can stay at a hotel for 14 days. So they're quite restrictive. As a result, society is pretty much free to move about. Bars and restaurants are open, hotels are open. But as you can imagine, flights into Vietnam have been pretty much brought to a zero. Airlines have, obviously have their trouble with revenue from international flights. Hotels that cater to foreign travelers are also facing a lot of trouble at the moment. So with that respect, we are less inclined to invest in tourism businesses, hotels at the moment. We are seeing strong growth in areas like IT, food and beverage. So during the April, May timeframe, when things got pretty bad, people went and bought a lot of instant noodles. They bought milk in a UHT package, so revenues for these businesses grew significantly. But as you can imagine, as things begin to get better and stabilize, families are sitting there going, well, now I have to eat the instant noodles and drink the milk, so that portion of the revenue will probably taper off. But other parts of the economy will come back. We're seeing areas like constructions come back, real estates, financials, banks, they all pretty much recover from the lows of the crisis in April, May timeframe.
Excellent. I was just going to add to that. If you look at the GDP growth for the last 9 months, over this period of COVID, Vietnam's delivered positive almost 3% growth, one of the few economies in the region. And to add to Andy's point, where has that growth been from? It's been from construction materials. It's been from services. It's been from agriculture. So these are sectors that are benefiting in some way from the domestic economy, but also from this theme that you may have heard Mike last week say, this stay-at-home goods.
Interesting. So let's get into the heart of the portfolio. So VOF has a very, very unique kind of mandate. Think about when you designed the portfolio in 2003. When you designed it that way, kind of a combination of public equity and private equity, you designed it that way for a reason. Are the benefits today in 2020 still there? And how do you think about it going forward?
Yeah, I think the answer is quite simple. If you look at the return that VOFs deliver on an NAV basis, we've outperformed most of our peers, including the index as well, over the last 5 to 7 years consistently. But when we constructed this portfolio in the early 2000s, we were sensitive to the fact that a lot of the assets in Vietnam were illiquid. Private assets, private equity, public equity were a bit illiquid, and they still are today. So VOF, as a listed vehicle in London, it allows investors to come and go as they wish. They can buy anytime they want. They can sell anytime they want. So it's a very unique vehicle in the sense that investors can choose the timing in which they can invest or divest. At the same time, it's scalable enough that we can make long-term investments that are large in illiquid assets and not be afraid of investors trying to redeem or subscribe at the wrong timing. And further to that, the vehicle pays a dividend, about 2 to 2.5% dividend yield per annum, which is also quite unique in Vietnam. We're the only fund that pays a dividend. So all in all, we're able to give our investors a chance to invest in private as well as public equities in Vietnam and allow them to time the market as to when they want to enter, as to when they want to divest.
Thank you. Interesting. So knowing the portfolio is a combination of both public and private equity, Convu, I'll say KV for the purpose of this discussion. KV, you've often talked about the team's approach as having a private equity approach to public equities. What do you mean by that?
Certainly, as Andy said, when we started in 2003, the investable opportunities in the public equity space was limited. What we found that over these 17 years of investing is that we've really honed our skills in private styles of investment. What do we mean by that? Well, generally, they tend to take about 4 or 5 elements. Number one is they ask for a performance commitment. So we ask for the sponsors to commit to a business plan over the next 2 to 3 years. Committing to that gives us some comfort that they are going to grow their business. We are a minority investor. So in doing so, we have to ensure that we have the downside protections of a minority investor. Minimum IRRs, put options, drag-alongs, tag-along rights. These are typical terms of negotiations that we seek when we enter. We look for management involvement, and that's critical. We are looking for strong management that we can trust to deliver on their business plan, and over that period of 2-3 years, that they will deliver alongside us. We get involved in elements of governance. We may put board members or supervisory members on there. We get involved in elements of ESG. When we invest into a business, we'll do as part of due diligence, technical, operational, ESG due diligence. And finally, what's important is that we have a clear level of exit, right? A clear point in time to exit. That could be through an IPO process, or it could be just to sell to a strategic or financial investor. These are the terms that you don't get when you're a public equity investor. And that's why we say that we take this private approach to investing.
Interesting. So I'll follow up on that with you. So, one of the things that we've talked about in the past and other conversations that you may have heard is that you've owned, many of the companies for years. And so companies that are public today started out actually as investments in private companies. Can you give a couple of examples of that? And I think it kind of gives more, fleshes out kind of the investment philosophy and practice.
Certainly. Our largest holding in the portfolio today is a company called Hoa Phat Steel, Hoa Phat Group. They're the largest steel company in Vietnam. We invested into this business back in 2007, and they were probably at that stage a top 10 steel company. By putting almost $80 million to work, helping them grow and build out a vertically integrated manufacturing capability. Today, Hoa Phat is able to deliver 5 million tons of steel, cold steel, hot rolled steel, construction steel to the market. This is really important because as you have heard over the last few sessions, the spending in infrastructure, this spending in infrastructure has really helped grow the domestic economy. And Hoa Phat stands to benefit tremendously from that. Our investment as a pre-IPO private equity investment has allowed us to build up a meaningful stake when this company went to IPO. And today, we remain a committed investor in this company.
Interesting. And for those of you that haven't noticed, I think Hoa Phat reported earnings last week, which were unbelievable.
Record quarterly earnings.
Yeah, I mean, so it is working out.
You know, they are benefiting from this tremendous level of economic growth that the government is committed to. Fiscal spending, public infrastructure spending specifically, is up over 40% from last year. The government has spent over $10 billion this year just on public spending. So companies like Hoa Phat, companies in the construction material space, stand to benefit from this.
So Andy, let's dig into the portfolio. What do you think about the kind of the asset allocation in terms of sectors? What does the portfolio look like today?
Yeah, I think first and foremost, we are focusing on the sectors that benefit or contribute to the domestic economy. The domestic economy is really about consumption. People are getting wealthier and wealthier every day. The average income per capita in Vietnam is about $2,500 to $3,000 per person. In the cities, about $6,000 to $8,000 per person, and it's growing. And our investment strategy or focus in terms of sector are sectors that benefit from that growth, such as healthcare, construction material, which I mentioned, property development, education, etc. So those are the key sectors that will benefit as the people get wealthier and wealthier.
Now, it's interesting, during our prep discussions, one of the things that we were talking about was the difference between kind of the terms domestic economy versus domestic consumption. Can you just spend a minute on that? Because I think people read kind of the emerging market middle class growing as if that's some magic panacea for economic growth. But as an investor, you have to really read between the lines.
Yeah, you're right. We do get a lot of investors very excited about the domestic consumption story. But how we look at it is a bit more different. Yes, there are areas that domestic consumption is very, very strong. But then again, the supplies to that sector is also very strong. So not all sectors are prime for good return, simply because there's just too many players in that particular space. For example, food and beverage. Everyone likes to get involved with food and beverage, whether they're manufacturing of goods to services like restaurants, etc. But I tell you, there's a lot of players in this space. Unilever, Procter & Gamble, all the big players are here, as well as domestic players coming up. So the potential return, it's probably there, but it's going to be very challenging for investors. So we have invested in the food and beverage space. But like I said, the potential return in the coming years is lower because there's a lot more competition. So we're sort of shifting away from that and focusing on education and healthcare, pharmaceutical, hospitals, etc.
So companies and industries that have higher barriers to entry, wider moats.
Yeah, exactly. Higher barriers of entries, and also the pricing power of these businesses are stronger. So they can price themselves higher for better quality or higher services, etc.
I think I just want to add that, as Vietnamese become wealthier, we're one of the fastest nation in history to move from poverty to middle income. As that wealth accumulation builds up, what we find is that Vietnamese will tend to spend on residential properties. They'll move out of their multi-generational houses. They want to spend on better healthcare for their children. I mean, we fortunately still have a sort of a growth rate of about 2% for the agricultural and about 1.5% for the cities. So we're still a productive nation. We're a young and productive nation. 65% of the population is under 35 years of age. So that sort of rising middle class, they're looking for better education, better healthcare, better places to live. And these are the sectors that we focus our attention on.
Yeah, interesting. Thank you. And so, one of the things that's unique about the portfolio, as I've researched it, was kind of having an actual target for certain sectors. So not really benchmark specific, but kind of versus yourself, so to speak. So can you walk me through why you have sector targets? I don't know if I'm phrasing that correctly.
Yeah, in order to manage or construct a portfolio of diversified assets that give our investors exposure to Vietnam economy as a whole, we owe it to ourselves to look at the various sectors and look deeper into each of the sectors and look at the potential return relative to competition, relative to demand and consumption, etc. And also couple it with the risk that's involved in each of the sectors. There's macro risks and there's micro risks associated with each of the sectors as well. So then we said, look, these are the potential returns for the 10, 15 sectors that we look at. These are the risks associated with each of the sectors. And as a result, we then begin to move our portfolio towards a direction of the exposure that we'd like to have in each of these sectors, like consumers, healthcare, education, etc. So we have an actual portfolio, but we also have a direction. And the direction tells us that we ought to head this way in order to increase our exposure to a particular sector or decrease our exposure to a particular sector.
That's not driven by a benchmark relative weight at all, is it?
No, it's not at all. It's driven by what we think is potential return. It's also driven by the risk that we associate with each of the sectors. It's also driven by the focus on trying to diversify the portfolio as well. We want a fair representation throughout the various sectors that, like I said earlier, benefit from the growth of the domestic economy.
And then I'm imagining you sometimes overshoot the target or undershoot the target based on performance, where you may want to trim a position if it runs too fast, or if something slows down, find a better opportunity.
So fortunately, the overshoot tends to happen because the capital appreciation on the assets that we've invested in, particularly as we take them public through an IPO. Obviously, if we take the company through a trade sale, they would be removed from the portfolio, so that doesn't have an impact on the sector exposure. But most of the cases is when we take a company like OCB that's going to go onto the stock market very soon, the value of the bank has gone up significantly, pushing the exposure, our exposure in the financial services sector, up towards the limit. And then you're right, we're going to have to sit there and go, okay, should we start trimming, taking profit, bringing it down to a level that's more manageable or more diversified within our portfolio?
Interesting. I'm going to follow up with you. One of the things we talked about, and it's very similar to the whole private equity, public equity, is the conversation about you buy companies, you don't buy stocks. Yeah. What do you mean by that?
Yeah, when you buy stocks, you can buy one or you can buy 1 million. But the idea is you buy it and it reaches a certain price, you sell it 1 or 2 or 3 years. We do look at that, but we look at more in depth at a business. We look at a business. We buy a company because we are not looking at the stocks. We're looking at the business. We're looking at the management team. They're one of the key reasons why we invest. We look at opportunities to make improvements, whether it's in the ESG space or corporate governance or better product development. We are looking at deeply into the business and seeing where the opportunity to make improvements lie. Because when we make those improvements, the value of the company goes up and we can benefit from that. So it's different from buying stocks. It's okay, I buy stocks with the hope that one, the revenue or the profit, the EPS will grow, and then inherently the price will go up, or there's the multiples expand in the stock market, and as a result, I benefit. No, we do look at that, but like I said, we look at how do we improve the business? How do we find the weaknesses in the business, in the management team, or what have you, and make improvements and grow the businesses.
Interesting. And is that approach kind of, in a sense, reflective of the overall growth opportunity in Vietnam?
Yeah, I think so. It's a reflection of the growth opportunity in Vietnam, but it's also a reflection of the fact that a lot of entrepreneurs, most entrepreneurs in Vietnam, don't have the luxury of working for a multinational previously and have the managerial experience. They don't. They basically started out business at zero, and they grew their business to $100 million in revenue or $5 million in profit, and they say, well, now they need help to take it to the next level. That's where we come in.
So, KB, I'll turn to you. So, as you look at kind of what's been interesting either this year, maybe even go back 12 months, from a private standpoint, what has been really interesting for you to focus on for the portfolio?
I mean, certainly it's been a difficult 12 months, but we've been able to demonstrate that even during that period, we're able to close on deals. Many of the deals that we've recently closed, for example, the Tu Quoc Hospital, it's one of the largest private hospital groups in Hanoi. It's the 8th hospital now in our portfolio. That took, well over 12 months to complete. Challenging, certainly, but we're able to do so. We're able to do so in a way that, the sponsor, we were able to get in at the same valuations that we were looking at well before COVID and these issues. We're also able to get the terms of negotiations that we still wanted. Of course, the other deals, given the uncertainties, other deals that we're looking at tend to take on a structured investment type of approach. These are debt investments possibly, but with an equity element to it. It may be have an equity warrant attached to it. It may have some conversion structure involved in there. These allow us, coming back to what we said earlier, the downside protections, the minimum returns, but it also gives us an ability to exit at a fixed time in the future. So, we certainly are very busy still. The team is very busy looking at the private and structured sides of the sort of the portfolio. But what we have also done is taken that opportunity when the market did take a dip in sort of late March to build up positions into public companies that we perhaps have been looking at for several years, but on a valuation basis, we found was too rich. We didn't participate, for example, when they IPO'd. But now, with the fair evaluations and the ability to still pick up large, meaningful stakes relative to the portfolio, we're able to pull the trigger and actually invest.
So, KV, earlier in the discussion, you had mentioned ESG. So some people think that ESG may be difficult to implement in an emerging or frontier market. Kind of explain how ESG has been and continued to be part of the process for the VOF team.
Yeah. As we mentioned earlier, as part of our due diligence work, ESG forms part of that. As a firm, we've been signatories to the United Nations Principles of Responsible Investing for several years. As part of the investment process, we've adopted the standards and the questionnaires and the risk assessment adopted by the IFC and World Bank. So for us, it's been part of what we do as we enter into an investment. And we actually don't do it just ourselves. We do have in-house resources, but we also engage external consultants that are specialists that help us look into this space.
So Andy, I'll turn it to you to give us a couple of examples of how kind of in practice you implement ESG. Because I know some managers, they say, we do ESG, and then you say, give me an example, and they go, well, wait, no, we don't have any. So give us a couple of examples of how actually we do implement ESG.
Yeah, as Ken said, it's part of our due diligence process. We do reach out to an external firm as part of our financial, legal, and technical due diligence. We include ESG. So then we look at the sectors. We have a list of sectors that defines what area of ESG is high risk and low risk. And then we reach out to the external consultant who then would do a due diligence and approach the business and looks at the business and finds where are the weaknesses and where we can make improvements. For example, when we invested in the second hospital platform, we found that although they were adhering to local standards when it comes to releasing some of the fluid into the gutter system, it was not up to the Ecuador standard from an ESG perspective. So in other words, the international standards were higher. They asked that the water be cleaner before they be released into the gutter system. We found some weaknesses. They've devised a plan to fix it. And it's a plan which we had to do what we call after the investment. So it's called what we call a condition subsequent. There are a few things that we can do as a condition precedent, the items that they have to do before we disperse. Those tend to be items that take very little time. For items that take time to work out or to improve, we put them into the condition subsequent activity. And along with the condition subsequent commitment, there are penalties. If the sponsors are not able to meet the commitment, we would try to work with them a bit more. Yeah. But if they fail to meet the commitment outright, then we have penalties associated with that. So it's effectively finding the weaknesses, developing a program to fix it, and getting a commitment to fix it, and associating with penalties in the case they don't carry out the commitment. So that's how we apply ESG.
And I think that, first of all, it's a great example. And what I appreciate about it is I think sometimes people even think ESG is exclusionary. You see something, you don't like it, you can't buy it. And in reality, you see something, you don't like it, you engage and you fix it. And then you generate more alpha because of it.
I think our biggest challenge is to convince the sponsor that by making these improvements, the value of their businesses go up, right? Or said differently, if you didn't make the improvements, when something does happen, you're going to spend a lot of money trying to fix it, right? So we like to be ahead of the game a bit, and we have the resources, we have the experience, we have the people. Why not put them in place and review the issues and put together a plan to prevent some of these catastrophes or pollution or what have you from happening?
Yeah, and it's also nice to, a lot of times I think in the emerging markets, people think ESG is really about governance. And this was an environmental issue, but it was really more of a business issue. So, okay, so we've talked a lot about kind of entry point, private equity approach to public investing. As important as entry point is, exit point is just as important. Can you spend a couple minutes talking about the sell discipline for the portfolio?
Yeah, exits, when we take a company through an exit, that's how we return money to the fund and to our investors. So that's extremely important. Each and every one of our investment cases, investment proposals, have to have a properly developed exit strategy. And so, and in general, we find that if a company has a strong retail brand, we can take the company to an IPO and list in the stock market. If the company is not as strong, doesn't have a strong retail brand, or they're basically a B2B business, they service other businesses. Steel companies, very good example. They tend not to do so well in the public equity. And how we define not doing well means that they trade at a multiple that's probably lower than the average. In other words, the steel company, HPG, although it's one of our largest investments, has done very well over time. It only trades in the single digits, right? Other companies like VinaMilk, which is also in our portfolio, it's a very sexy, milk consumer business, food and beverage. They traded 21, 22 times. So they trade at that multiple consistently. Then you really have to look at the earnings over the years. And in the case of the steel company, we've been very fortunate. The earnings have been consistently around 25 to 35% per annum, even though it trades in the single digits. So what I'm saying is, look, the company is probably not best to be listed. But once it's listed, it's okay. You accept the fact that it trades in a single digit, then you work on the earnings growth, which is about 25 to 35% average over the last 5 to 10 years, which is great. That's how you get capital appreciation in the business. So basically, we said, look, if a business is not primed for an IPO, then we have to look at what value would a strategic buyer place in this business. So when it comes time to selling the business to a strategic buyer, like the Taisho, we sold the largest pharmaceutical company to Taisho from Japan, or we sold Halico, the largest vodka business, to Diageo. What is the value? What value do they place in these businesses? And they typically revolve around three. One is brand equity, two is distribution channel, three is manufacturing capabilities, right? So if you focus on those elements, the value of your target, the value of your business goes up significantly.
Now, I'm going to bring up something that was actually discussed last year, which actually was a successful exit, but I think a painful process, maybe over years, which was IDP. Last year people were, I guess, asking questions about it. So can you explain kind of what the exit was and actually what the return was?
Okay. So IDP, is some of our investors know, we invested in this food and beverage business, in the milk business, about 4 or 5 years ago, and it was a distress investment. We were confident that we would take the company out of distress.
We knew it was distressed at the time.
Yes, it was financially distressed. It was financially distressed, and it was competing against VinaMilk, which is the other milk company, which is also in our portfolio. But we felt there's a significant upside if we can make the improvements and get it out of distress. So, like you said, it's been a difficult 3 or 4 years of investment, but we finally restructured the business. Sales went up double what we initially enjoyed at the beginning. So sales went down, profit went down. We restructured the business, and upon 2019, sales doubled relative to the year that we invested in. And 2020 continues to grow, and we're able to find a strategic buyer to take us out completely. And I believe, if the numbers are not mistaken, we deliver about 1.7, 1.8 times multiple on investment. And so it's been a very challenging ride. We've learned a lot. And like I said earlier, in the consumer space, there's a lot of players.
Well, but let's just think of it this way. If you look at it, was it a successful investment? It's binary. and you made money.
Yes.
Like a lot of money on that.
We made money. Could we have done better with another investment? Maybe. But we've learned a lot from this. And that's where investors will benefit from our knowledge and experience. Going forward, we will look at similar businesses again. We will be looking at similar situations again. Do we have the capability and experience to manage it? Probably, yes. So we're happy to take on more challenges, if you will, because we have some experience in doing so.
Yeah, I mean, I understand the opportunity cost. I just want to make sure that even when it was kind of a painful process, the ultimate exit was actually quite positive.
Yes.
Okay. KB, I'll turn it to you. We'll probably go back to Andy on this one as well. What does the pipeline look like? So here we are, 2020, portfolio's done well. Vietnam, one of the few countries with positive GDP growth, and people are already forecasting 2021 back to a normal kind of 6 to 7% range. Does that influence your pipeline and kind of what is looking pretty good in the next near future?
Yeah, certainly. We've mentioned some of the sector areas that we're focusing on: education, healthcare, technology. Those are the sectors that we're still finding opportunities, perhaps on the private side. On the public side, the government has sort of really arrested the process of equitization. So those opportunities are not yet available. We'll certainly look at them, and we think that leading into 2021, there'll be more opportunities in that space. So we'll keep our powder dry for that. But importantly, in order to deliver returns to our investors in the medium term, we've been investing into structured investments. So these are investments, as we said earlier, they give a minimum IRR and a potentially an equity upside. So, Andy, anything else?
Well, before I forget, one other thing that I want to point out when it comes to our entry, the private equity approach allows us to take a meaningful stake, which helps us significantly on the exit side, right? It gives us optionality. In other words, when a strategic buyer comes in, they want a meaningful stake. We have it. And our drag-along rights also brings along the shares owned by the sponsor.
So owning 2% doesn't help you, but when you own 10 or 15, then it's interesting.
And the drag-along allows us to take the sponsor shares and move a controlling stake to a strategic as well. And taking the company onto the stock market is always an option, right? And having a meaningful stake in a really positive growing business is very strong because, as you know, we still have a 49% foreign ownership limit. We don't have this limit when we make the private investment. It's just when the company is public, it's subject to the 49% foreign ownership limit. Okay, so that's on the exit front. As for the pipeline, I think we're in a unique situation, and the travel restrictions has prevented a lot of regional and international players from coming into Vietnam. Vietnam is still on everyone's radar. It's growing from a GDP perspective and a positive side. So it's still the darling of a lot of players. Unfortunately, they can't travel to Vietnam. We are on the ground. So what are we saying? We're saying we're seeing a lot of deals, a lot. We get to choose from a lot of opportunities right now, from healthcare to education to materials to restaurants. We have a lot of deals. That means that, one, we can be a lot pickier. We can focus on the management team that we like. And we can get the valuations that we like as well.
With pricing power?
We have pricing powers. We have better terms of investment. So right now, the opportunities are there. They're plentiful. We're on the ground. We have the capital. And so we're in this fortunate situation. I don't think it's going to last very long. It'll probably be about 9 to 12 months out before the investors will have the ability to travel to Vietnam to do due diligence, etc. But by and large, the travel restrictions has allowed us to develop a pretty strong pipeline of opportunities, whether it's in the consumer space or the educational space, the material space.
One topic that we haven't discussed yet is the government. And so, as people look at the fourth quarter, a lot of people are forecasting kind of global volatility. There's a lot of focus on the U.S. election, which has, clearly some divisive elements. There's actually an election coming up in Vietnam that a lot of people aren't talking about. Do you foresee that as an issue in terms of who wins, or does that actually change the landscape or the opportunity set?
For the foreseeable future, yes, there will be an election. We don't foresee any major changes in policies. I think there'll still be a pro-growth story. It'll be a story in which the government would like to mobilize more foreign direct investments. The Samsungs of this world, the LGs, the Apples, the Apple Pods. Those are the folks that come into Vietnam, invest a large amount of money, and stay for the long term and create jobs, right? So that will still be key. I think the government is poised to maintain a very stable local currency against the U.S. dollar. Stability is key. That keeps me up at night because if it gets volatile,
we'll get there.
We'll get there. Okay, but but I think by and large we are seeing policies remain unchanged and continues to be stable and growing going forward.
The other thing, as it relates to the government, I was reading something the other day, and it talked about the government reaching out to several financial firms for guidance, for outreach, just to talk about the future of policymaking. So, what is your view on kind of the partnership, for lack of a term, with the government and the future for capital markets in Vietnam?
Sure. I think we've been very fortunate because of our size, our scale, and our brand recognition. We're in constant dialogue with the government, and particularly the state security commissions and the Ministry of Finance, as they develop new rules and regulations to manage and regulate the financial sector, or the capital market sector, if you will. And so we've been very fortunate to play a key role in that. And they're very open to our ideas, simply because they want to attract foreign investments. They want to move from the MSCI frontier market to the emerging market. They want to create a very strong stock market with depth and size and liquidity. So we're constantly in dialogue with the government. What I like to see going forward is more discussions around pension businesses, endowment businesses. The foundations of any stock markets require these types of funds. They're domestic funds and they're the people's funds. More product to be discussed on the derivative side. Today we have very minimum derivative products, so we'd like to see more of those. But as time goes by, we are the market is slowly developing. We don't want to go too fast, but we don't want to be slow either. We want to have a constant development of the market for various products, and the various types of investors can participate more and more.
But I think it actually is I think it's heartening and surprising to people to understand how involved the government is in a positive way with the larger players here inside of Vietnam.
Sure.
Right. So KV, turning over to you, what excites you when you think about 2020, which has been a weird year for everybody, let's be honest. What is the things that say, you wake up as a portfolio manager, here's what excites me, here's what's getting me out of bed every day?
Yeah, exciting is a difficult word to use in 2020, but I think this idea of resiliency, you hear sort of this across many sectors, finding resilient businesses. And that's what is important for us, is the ability to find and invest into resilient businesses that will, leading out of this pandemic, and we'll surely get out of this, we can hope for that. And it'll probably be sooner than we expected, right? But the idea is that to be able to invest into resilient businesses with strong management, that's really what is exciting. You can find those opportunities here in Vietnam. And as Andy said earlier, there's a lot of opportunity in the pipeline. And so that excites us, the fact that we can still put money to work in this market.
So Andy, I'll turn it over to you. What excites you? Same question.
We are here for the long run, right? I'm Vietnamese, Kan's Vietnamese. We are here for the long run. And what excites us is to see a vision of Vietnam 5, 10, 15 years from now, and to see the growth and to see the changes that we can make in terms of individuals by individuals, companies by companies, and see how they develop and change. When we invested in Hoa Phat in 2007, 2008, we couldn't imagine what it looks like today, right? When we invested in the largest jewelry company, P&J, we couldn't imagine it'd be what it is today. VinaCapital's as well. So a lot has changed, and that's what excites me, because of the companies that we invest in today, what is it going to look like in 5 to 10 years, right? They're going to be on the stock market, they'll be growing, there'll be a brand, and everyone will recognize this. We want to be part of that story.
Yeah. No, and for those of you who have been to Vietnam, you can certainly understand what Andy's talking about. For those that haven't, it's the amount of kind of retail space that the H&Ms, the Zars, the Hugo Bosses, Adidas, Nike, Puma, it's like it's everywhere. These companies in the country, quote, has arrived. Let's take the other side of that. I'm sure some people watching are saying, Here's an asset management company based in Vietnam, bullish on Vietnam. Surprised. What is the bear case? What keeps you up at night that doesn't excite you, I suppose?
Yeah, if you're referring to the risk that keeps us up at night, I do keep 3 or 4 in mind all the time. At the top of the list is the local currency against the US dollars. If you make a good investment and all goes well, but the currency devalues against the US dollars, you find yourself losing capital on that. The second risk that keeps us up at night is corporate governance. Not so much in the companies that we invest in, because we're pretty confident that our due diligence activity have sort of made us a better understanding of the business. It's more of the weak corporate governance outside the companies that we invest in that, as a result, leads to some sort of negative news, and as a result leads to global investors being disinterested or not so interested in Vietnam anymore because of the risks it poses in the corporate governance side. The third risk that keeps us up at night is, as you know, Vietnam is getting more and more integrated with the international community. If you add import and exports together and divided by GDP, it has one of the highest ratios in the world. That means Vietnam is highly dependent upon import and exports with various countries around the world, including the United States and Europe, which means that the risk of global uncertainty plays a huge role in Vietnam. Global uncertainties will cause a redemption in funds in Vietnam. It will cause people to sell and assets to deflate in value quite significantly in a very short period of time. So those are key items, key risks that keeps us up at night at the moment.
KV, same question for you. Anything you pay special attention to?
Certainly. I mean, this idea of resiliency in the economy, it's also important in our portfolio. Having a resilient portfolio is important for us because as we get out of this pandemic, we want to be able to deliver strong performance to our investors in the medium to long term. So being able to find resilient companies, find resilient businesses that we can invest into to get the terms that Andy mentioned, the private equity terms, this is important for us. So these are the things that keep me awake at night, in addition to the 3 or 4 other risks that Andy mentioned.
Well, gentlemen, that was terrific. Now, as I mentioned, this is virtual. And so one of the things just on day one where we had filming of the Lion Dance, which is a great way to kick off a new venture. Today, because we cannot host you here in Vietnam, we did want to give you an opportunity to see some of the companies that we are investing in. And so we've asked 4 of the companies on the private side that are investing companies in the VOF portfolio to create a couple of 2-3 minute videos. And so we're going to show those to you now. And then once the videos are done, we're going to come back and we'll do a Q&A with the audience. So if you have questions, start putting them in the chat line. And we look forward to coming back to you in about 10 minutes. Thank you.
Thuy Cup International General Hospital, or TCI, is a leading private hospital in Hanoi. This is our latest private equity investment, which we closed in early August after more than 18 months of due diligence and negotiations. The outbreak of COVID-19 at the start of this year imposed an awkward intermission to our progress, but nevertheless, we persevered, and working with the sponsor during these challenging times, VinaCapital led a consortium to invest $27 million into this private hospital. We obtained full due diligence rights, including ESG due diligence, and as a significant minority investor, we have board seats and other standard terms that we seek for private investments. Ms. Nguyen Thuy Cup has been involved in healthcare services since 1996 and in 2011 established TCI. It is located in one of the most populated and rapidly developing areas of Hanoi. TCI is a trusted destination for high-quality services at affordable prices in the fields of obstetrics, gynecology, oncology, and other specialist branches of medicine, and offers comprehensive health checks for corporates like Samsung and individuals. Furthermore, TCI has the enviable achievement of being one of the first private hospitals in Vietnam to win ISO accreditation for quality clinical laboratory testing. Today, TCI employs more than 1,400 staff, including over 230 doctors, many of which have more than 20 years of experience at leading national hospitals.
For the past 10 years or so in Singapore, when seeing more and more Vietnamese patients coming to Singapore for treatment. So I'm glad that we have opportunity to partner with Tukut Hospital to set up the service in Tukut Hospital in Hanoi in Vietnam to see Vietnamese patients in the home country.
As Vietnam's middle class continues to expand, consumers are seeking greater access to private medical services, which will help relieve the burden on the public health sector. VinaCapital has long recognized the enormous growth potential of the healthcare industry, and VOF was one of the first investors in the private healthcare sector in Vietnam, dating back to our investment in Hoa Nam Hospital System in 2009. TCI is widely recognized as one of the top private hospitals in Hanoi, a position they have reached in a relatively short amount of time. That speaks to the vision of and focus of the founder, the dedicated professional medical staff, and the high quality of care they provide. For those who may recall, at last year's investor conference in October, we announced a private equity investment in one of Vietnam's leading packaging companies, Ngọc Nghĩa Industries. Ngọc Nghĩa is a pioneer and leader in the manufacturing of PET packaging in Vietnam. VinaCapital led a consortium to invest $21 million into Ngọc Nghĩa. We obtained full due diligence rights, including ESG due diligence, and as a significant minority investor, we have board seats and other standard terms that we seek for private investments. Based in Ho Chi Minh City, they're manufacturing across 3 production sites. In terms of volume, Ngọc Nghĩa accounts for the largest market share of PET packaging manufactured per year. PET is highly recyclable, lightweight, resealable, and shatter resistant. It is used in a variety of food and beverage, as well as home and personal care products manufacturers. With the onset of COVID-19, the consumption of personal care products like hand sanitizers increased significantly. Ngọc Nghĩa were able to rapidly pivot and produce these packagings. Ngọc Nghia's long-standing relationships with a range of international and domestic clients such as Unilever, Coca-Cola, Pepsi, and Vina Milk will help further drive the company's growth. Ngọc Nghĩa is a great example of a scalable, market-leading company we like to invest in. It is well established and serves some of the sectors that are benefiting from Vietnam's strong domestic consumption story. Its management team is experienced and recognizes the need to innovate and evolve with the market. They have strong commitment to research and development focused on minimizing environmental impact.
In June 2016, we announced a private equity investment into An Gun Woodworking, one of Vietnam's leading woodworking and decorative materials company. VinaCapital led a consortium, which included DEG, a member of the KfW Group, to invest $30 million into An Gun. We obtained full due diligence rights, including ESG due diligence, and as a significant minority investor, we have board seats and other standard terms that we seek for private investments. Established in 1994, An Gun manufactures a wide range of products, including wood and laminate, paneling, flooring and furniture, which are used extensively in modern interior designs, decorations, kitchens and cabinets. Its products can be found in houses, apartments, buildings, schools, supermarkets and offices. The company is a manufacturer and exporter of well-known brands throughout the world. An Gun has more than 4,000 employees, over 10 showrooms across the country, and its Binh Duong factory covers an area of more than 200,000 square meters. Using the latest manufacturing technology from Germany and Italy, it also has representative offices around the world. Recognized as the #1 wood-based surface specialist in the country, the company's products meet international standards for design and quality. Its sustainable, environmental and social practices have been recognized with an ISO certification, and its products are certified by Green Label Singapore. This company is committed to continuous improvement in its ESG practices. An Gun has great management who are ambitious and innovative and always looking at how they can expand in a sustainable way. We are pleased to be partnering with DEG to help An Gun further build on its leading position in the industry and enter a new phase of growth. In January 2020, we closed on another private equity investment, this time into a company called In Holdings, who own and operate several high-end convention centers, including the Gem Center, which is what we are watching in this video. VinaCapital led a consortium to invest $24 million for a significant minority stake in the company and have board seats and supervisory seats, and other standard terms that we seek for private investments. The sponsors, twin brothers incidentally, founded the original wedding banquet business back in 1997, and by 2007 launched the convention and conference business, operating hospitality and food and beverage services. Today, the company operates several landmark convention centers in Ho Chi Minh City, including the White Palace, which opened in 2007, and the Gem Center, which launched in 2014. Through a high level of service, exceptional food quality, and well-maintained facilities, their convention centers are recognized as the premier wedding and banquet centers in Saigon. The Gem Center focuses on the corporate customer segment and has modeled itself against a five-star hotel in terms of service standards. Covering an area of 22,000 square meters in Ho Chi Minh City, the Gem Center has a competitive advantage over the other five-star hotels in Saigon, in that it is able to offer larger ballrooms. Admittedly, the convention business has been impacted by the pandemic and the slowdown in economic activity. However, Vietnam's young population with rising income will remain potential customers for event services in the future. The business is led by hands-on founders and a strong leadership and service team. Longer term, the business has a strong, defensible moat with high barriers to entry and has sufficient and prudent cash management in place to last it through the crisis. The rapid reduction of economic activity and the opening up of the cities, thanks to the effective control of COVID-19 here in Vietnam, has meant that business activity is slowly returning, but it may be a while before we see it return to pre-COVID levels.
Well, thank you very much. I hope you enjoyed those videos. And it's really a great way to see what's going on in the private companies within Vietnam. And give a special thanks to our colleague KV for narrating those videos. Now, we've talked to a bunch of people in the setup of this conference, and we understand that many folks actually haven't been to Vietnam before. And so Andy thought it would be a great idea to take a look outside and see what exciting developments are going on right outside of our office. Now, Andy, you had this great idea. Again, it's a challenge. We can't host people here in Ho Chi Minh, but I think it's important that people see all the activity and what's going on here right side of our office. Can you take a look and kind of tell me what you see?
Yeah, Eric, I'm always excited to showcase Ho Chi Minh City and it's how active it is. So on your right, you have the Mandarin Oriental Hotel, which is slated to be open anytime now. Obviously, COVID-19 with the restrictive travel, there aren't any foreign travelers coming in and staying there, but it is slated to open anytime now. In the middle, you can see that a hotel is being halfway built. It will be the Akura Hotel from Japan. And further to your left, you can see the subway system being built. And hopefully in 2021, we will have a fully operating subway system in Ho Chi Minh City.
And that'll be the first subway here. And I think the reason it's being built is now there's so much traffic and congestion, there's so much activity. What's exciting to me is, you see projects that are kind of slated to open 2021, 22, 23, and, progress hasn't stopped. The investment is still being made every day.
That's right.
Well, we hope that you enjoyed that very brief tour of what's going on outside of our office in KV. Thank you again for the narration. I think you have a future in the movie business. Now we're going to transition to Q&A. It's very nice to see that a few questions have already come in. So what we'll do is we'll move to the questions. And so for those of you who are wondering how to ask a question, just go into the chat function. I've got a little remote here, so if you see me moving something, I'll be going down looking at some questions. So first one, we'll actually talk about the VND. We're going to talk about performance first, but we're going to switch it up. Andy,
yes.
VND. So there's a question here from Brett that says, are you surprised that the VND hasn't been stronger given how well COVID is being managed, or like other currencies, is this still not seemingly evident in currency values?
Yeah, I think that's a great question. There has been a sense that the VND has stabilized quite significantly against the US dollars. And perhaps because the government has done such a good job managing COVID, that the VND may appreciate in value. Although we do have a reserve in US dollars of in excess of $92 billion and over 4 months worth of imports, the government's objective has always been to stabilize the currency against the US dollars. It helps in terms of export, imports, and foreign investments, whether it's direct or indirect. So the government's objective is to keep it stable. So I am not surprised that there hasn't been a major movement in terms of appreciation. But although if we talk to our chief economist, he will admit that there will be pressure to have the local currency appreciate more and more in the years to come.
Okay, terrific. And you know, it's interesting, one of the things we did in the first kind of 45 minutes is we really focused on philosophy and process. We haven't spent actually as much time talking about performance. A couple of questions have come in saying, hey guys, how have you done? KV, I'll put this one to you. What has performance been for VOF?
Despite the volatilities this year, it's been a very good year. Calendar year to date, VOF is up 4.6%. Sorry, is up 8.5% calendar year to date on a total return basis. And as you know, we don't benchmark ourselves against the Vietnam index, but it does serve a useful comparison. The benchmark is actually down 4.6%. So the fund is actually outperforming the index by over 13%. A more useful comparison perhaps is our capital markets portfolio. And over that same 9-month period, the capital markets is up 7%. So really it shows that
you mean the public companies?
The public companies, the public listed companies in the portfolio is up 7%. I mean, it shows that the combination of our diversified strategy, a combination of listed, unlisted, private equity, public equities, really gives you that outperformance, particularly in a time of volatility. The share price is flat for the year. I guess that what it really means is that the discount is widened. So an interesting opportunity for investors to step in.
Yeah. Now, another question that came in, and I think it's, appreciate this because it means that people really understand the portfolio in terms of being public equities and private equities, understanding the performance. Have we revalued the private equity portion of the portfolio given market movement?
So, as part of what has happened economically, we're looking at our businesses. If you recall, the private equity portfolio is valued independently. We have independent valuers. They report directly to our audit committee and our board. What we have seen is that there has been some minor adjustments over the year, but it comes back to this theme that we said earlier about the resiliency in these businesses that we invest in. And fortunately, we have not seen a material adjustment in the private equity portfolio this year.
And you kind of said it, portfolio's up 8.4, public equities are up 7%, so you can, even I can do that kind of math.
So hang on, the last official valuation was on June 30th, 2020, and like Ken said, it was done by KPMG, who reports to the audit committee of the board. So they decide the opine on the valuation of the private equity component of the total portfolio.
Sure, thank you. Okay, well, a couple more questions have come in, so I'm going to scroll down. You see that there's an echo on the microphone, so if we could just work on the audio, that would be great. Okay, and KV, is there a limit on the percentage of private equity that can be in the portfolio?
We don't have a hard limit on the portfolio, but we're conscious that we should be targeting about 20 to 25% of the portfolio into private equity. There are several reasons for that. We've found that historically, many of the investments that we enter as private equity investments, they tend to migrate themselves to public equities. So as part of our investment philosophy and the terms of our investment, we may encourage the company to IPO and remain investors. Also, there is this perception that private equity assets may attract a wider discount due to liquidity valuations. So we're very conscious that, that we set a limit. While we don't have no firm limit, we do have an indicative target, a bit like sector allocation. Yeah. We do have an indicative target between 20 to 25% of the portfolio. And today, private equity makes up approximately 20% of that portfolio.
Okay, terrific. A question that just came in, I'm going to put this one to you, Andy. Last week it was talking about multinationals are increasingly seeking to source higher value components from local Vietnamese suppliers, you know, kind of moving away from garment and into more technology products. Is this an area that VOF can invest in and take advantage of directly?
Yeah, we're yes and no. First and foremost, we do believe that foreign direct investment is happening in a higher pace, which means multinationals are migrating some of their manufacturing activities from China into Vietnam, one, to react against the US-China trade war, but also to react against the supply chain disruption that they witnessed as a result of COVID. So we are seeing a migration to Vietnam. So first and foremost, what we're looking at is what are the opportunities related to the land, the industrial land, the logistics, the warehousing, those areas of those areas of the value-added chain first. We have not gone into the components, the high value-added components part yet, because it's fairly difficult, and it's really because it's driven by one or two customers. If you focus on a highly technical component, you inherently find yourself in a situation that this business service one or maybe two customers only. It presents a customer concentration risk which we are not willing to absorb.
You might like the theme, but the actual way to play it, once you evaluate it, you say, love the idea, don't love the investment.
And this is quite similar, not too long ago, about 5 to 10 years ago, when the manufacturing of furniture took off in Vietnam. So you find yourself in a situation where, yes, we can produce furniture at a lower cost, and then lo and behold, you get folks like IKEA coming to Vietnam, and their orders are so large that what happens in some of these factories, IKEA becomes their sole customer.
Yeah. Right? That'll limit the pricing power.
There you go.
Okay. Now I'm going to ask you a related question that came in just a minute ago. Is there, we talk about what's going on with the U.S. and China, the frictions, trade war, whatever you'll call it. Is there substance to the idea that Chinese companies are actually even themselves shifting their manufacturing out of China and into Vietnam? And if so, is that a way that they're bypassing sanctions, and is Vietnam kind of benefiting from that?
Yeah, certainly. I think one of the reasons is they're trying to move away from the tariff that I suppose the current administration in the U.S. are imposing on Chinese-produced goods. But I think the more longer reason, more longer-term reason, is really about diversifying their manufacturing away from China to access lower cost of labor. Vietnam's labor cost is about 1/3 or 1/2 that of China. It's trying to diversify away from supply chain disruption.
So Chinese companies are even doing that just like a U.S. company or a European company would do.
Even Chinese companies, you're right, even Chinese companies are migrating some of their manufacturing to Vietnam. And the other thing is they want to access the Vietnamese consumer market. Right? That's another reason why they want to access Vietnam.
Okay, terrific. Another question just came in, so let me just hear that. Okay. This is from Philippa, and thanks for questions last week and this week. How are managers tied into the companies? And I'm assuming this is kind of the private companies we're talking about. Is it shares, options, etc.?
Yeah, it's a good question. We tend to practice, we tend to absorb international practices when it comes to alignment of interest between the shareholders and the managers of the business. So we do encourage a long-term incentive program, if you will. I call it LTIPs.
Yep.
And LTIPs tend to include stocks, shares, that tends to motivate the individuals, the key individuals at least, to make decisions for the long-term benefit of the business. So yes, the answer is options and stocks are all on the table, and they are encouraged, and key managers are encouraged to be shareholders of the business.
Is that something that's either new in Vietnam or something that some of the managers have been exposed to? I mean, I'm assuming that they appreciate this, kind of becoming owners of their company in a more meaningful way?
Well, if you look at the market in general in Vietnam, this is not new. But obviously for certain companies, this is completely new. Yeah. The genesis of a lot of this discussion happened maybe about 10, 15 years ago, and it was a result of the equitization of state-owned enterprises. Okay. So what happened was a lot of these key executives were working for a business that's owned completely by the government, day zero. Day one, they started equitizing the shares of the business and selling the shares to the market, the private sector, as well as the manager. So the government says, well, they get smart, they say, well, why don't we motivate the managers as well as outsiders to participate in our business and to create more value. So the government actually, they put together a program whereby the managers can buy into the business at a discount relative to the share prices that private sector would buy in.
So it wasn't just taking them public, it was actually creating a management team that was aligned with the business.
Yes, and franchising, if you will, management to be shareholders of the business and aligning their interests with the government's interests, because the government's the shareholders of these SOEs.
Okay. Now, I'm going to stay with you because there's a question that's tied to one of the questions we just asked about, which was the Vietnam Dong. And then there's, you know, obviously in the U.S., maybe it was a few weeks ago, there was talk of, I think it's called Section 301, where there's the U.S. Treasury is thinking of putting Vietnam as an investigation of being a currency manipulator. Do you think that'll have any real teeth? Do you think there'll be any sanctions? And is that tied? Is that maybe a reason why you think the Vietnam Dong will strengthen? Are those two issues linked?
I think yes, Vietnam has been put onto the list that you know, the government may be manipulated their local currency. The thinking is that Vietnam continues to undervalue the currency so that the exports are competitive. The argument in Vietnam, in the last 5 to 10 years for that matter, has that the government is so afraid of the currency being devalued. The currency has been steadily devalued. If you look at the number 10 years ago, it has been steadily devaluing at about 2 to 3% per annum. Okay? So the government is quite afraid, or they're very conscious of the fact that it's devalued. They don't want it to devalue.
So they want it to strengthen.
They want it to stabilize.
Okay.
Right? Now, what's happening is there's a reserve of US dollars that's growing quite rapidly that is putting pressure on the appreciation of the currency. Right? And so I think the complaint, is that if the Vietnamese government continues to print money and manipulating it and making it devalue, then the exports remain competitive.
Sure.
Our view is that, one, the government is not doing that. Like I said earlier, they want to stabilize the currency against the US dollars to make businesses stable. Okay? They will be under pressure to allow it to appreciate in the years to come. Second, I personally, I don't think there's going to be a lot of actions from the U.S. government to penalize Vietnam or any sanctions, simply because Vietnam is a close ally of the United States in this region. Yeah. If you look at some of the other economies and countries in Southeast Asia, a lot of them are aligned with China. And Vietnam happens to be very neutral, but it allows the government of the United States to look, they're a neutral player, so we need to make sure they remain neutral in the whole
You might even say Vietnam might even be leaning more towards the U.S. in this path. Yeah. Okay, terrific. A question came in as well. Can we shed some light on the top 5 holdings as a percent of the NAV, and in the unlisted space, the fund? How much does the fund own of a specific bank? And I didn't say the bank just in case I don't know if we're allowed to publicly mention that. So, okay.
Yeah, happy to share. So as some of you may know, we exited one of our largest private equity holding in a company called IDP not too long ago, and we made a handsome return on that. Now the number 1 company in the private equity portfolio is called An Cuong Woodworking. They are the largest.
We just saw the video.
Yes,
from
that's right. That's right. They are the largest laminate wood producer in Vietnam. Why is it interesting? They are an interesting company because they're making doors for all these apartments, all these residential apartments being built in Vietnam. There's a huge amount of residential apartments being built. They also make the panels for the kitchen tabletops, the doors for the kitchen cabinets, all that stuff. And as you probably know, if you have an apartment in Vietnam, you need all these panelings and woods and all that stuff. So they're doing very well into that. Yeah. There has been a slowdown, but it's not so much related to COVID within Vietnam. It's because the real estate activity in Vietnam has slowed down, because not a whole lot of the projects have been approved over the last 12 to 18 months.
So okay? what about the other
hang on. But on the An Cuong side, there has been slowdown on the export front. One of the key success factors for An Cuong is they've been able to export their goods to the United States and India quite a bit, because they have a strategic investor in their name, SMBC Force. Okay, and they've been helping the business export a lot of the goods. As for COVID, that's where the impact is, because we've seen the orders sort of slow down or being postponed into 2021. So when things get stabilized in the United States or India, the orders can come back again. Okay. In terms of Tâm Chi Medical Hospital, The hospitals are doing well. During the lockdown period.
Video?
Yes, we had another video on Tam Chi. Was it
the new investment.
Yeah, we have 3 hospital platforms. We have 3 hospital platforms. Tam Chi is being one, Tukuk is the other one.
And Taiwan.
All the hospitals, they had some trouble during the month of April and May when there was a lockdown. So patients weren't coming in. And subsequent to that, as you can imagine, patients who were really ill would visit the hospital. If you had a minor illness, you would not visit the hospital. So what we saw was during the last, 3 to 4 months, the number of patients visiting the hospital dropped about 30%. However, the average bill per patient actually went up about 30 to 50%.
Of course.
Right? So the drop in volume was overcome or compensated by the higher increase in the average bill per patient. Simply because now when you do come and visit the hospital, you have an illness, serious illness, right? So that's been very helpful. Okay. Another holding in the portfolio is in-holding or the GEM. I think that's in the video. GEM has obviously been hit because when COVID is happening.
GEM is the event center.
Event center. The government is not going to allow people congregating in the tune of 30 or more people. So you can't host corporate events, AGMs, EGMs, or any corporate events, or even weddings. So for that period of 2 or 3 months, there was no activities. Since the government has been able to control COVID and allow social activities to commence again, Gem Center and White Palace have all gone back to more or less normal activities. But for the year, you can imagine the revenue will be much less.
Sure.
The general thinking is that they'll do probably about 20% to 20% lower than last year, or probably similar levels relative to 2019. And I think that's sort of the general discussions on the top holdings of the portfolio. How much do we own in OCB? We have almost 5% of OCB. That is the maximum limit that we as an independent financial fund can hold in OCB.
5% of their shares?
Oh, yes, of their shares.
Okay, and so what weight is that in our portfolio?
Oh, well, that's been growing quite quickly. And simply because one, OCB, when we invested in OCB, it was about $300 million in value. They just, on June 30th, 2020, they brought on Azora Bank from Japan as the strategic investor at a value of $1.1 billion. So from that perspective, we've gone up more than 3 times our investment cost. They are committed to us to list the company on the stock market in the Ho Chi Minh City Stock Exchange. They've submitted all the application. The hope is by the end of this year or early next year, they will be listed on the Ho Chi Minh City Stock Exchange, which will hopefully solidify the valuation that they earn during the transaction with Azora Bank.
Well, that actually, it's great. Will that actually, do you think, revalue some of the other banks as well?
Well, that's a great question. Over the last 2 or 3 weeks, the other banks have been revalued already.
Okay.
Now, what's happening? I think there's been a lot of discussions and noise about the financial and banking sector in Vietnam. There's a number of banks
still private, correct?
Yes, the number of banks are trying to list very quickly onto the Ho Chi Minh City Stock Exchange, simply because if they aren't able to submit the documents and submit the documents for approval before December 31st, 2020, they'll have to wait for 2 years before they do so. So there's a rush to do this.
Okay.
And investors like that. Okay, you go onto the exchange, everything is more transparent, more liquidity, and they participate in the banks. The second thing is we have seen the performance of some of these banks surprisingly very strong, right? Our latest holding is ACB. We just invested over $40 million in ACB, and the performance of ACB for the first 9 months of the year is up over 30% in terms of earnings. Okay, this is during COVID period. The NPL continues to remain under 1%. It's probably one of the best private banks in Vietnam.
It's a fairly conservative profile. I mean, that's the kind of within Vietnam, when you think about the different banks, that's known as a very good, stable, kind of conservative approach.
Private, stable bank. And they trade about 1.4, 1.5 times book value. On the other hand, Vietcombank, which is a state-owned commercial bank, trades at about 3.2, 3 book value. But all the investors love to buy into Vietcombank because, one, they're the best bank in Vietnam because it's the largest, has more scalable operation, but also it has foreign room because it's so large, foreigners can participate in the shares quite easily. Okay, whereas ACB, there's no more foreign ownership. There's no foreign room to buy into the shares.
They're also one that are moving their listing as well,
Yes,
right?
they've submitted the application to list in Ho Chi Minh City Stock Exchange.
Let me ask one more question about on the private equity side. You know, I would imagine this question is probably relevant every year. I'm not sure if it's more relevant now or not, but you know, earlier you talked about deal flow and opportunities. What kind of criteria do we because we talk about what we own. We don't talk about, we shouldn't specifically talk about what we didn't buy, but what is the criteria that we use to say, great idea, not for us?
Yeah, I wish we had a checklist, right? And I try to have a checklist for almost everything, right? But there are certain basic criteria we do look at. And fortunately, over the last 6 to 12 months, we've had a tremendous amount of opportunities to come to our attention. I think simply because a lot of foreigners simply can't travel into Vietnam for travel restrictions. So when we look at a business, we tend to focus on the key components of its success. One, the management team. Can we trust the management team? Can they develop a reasonable business plan and execute to that reasonable business plan? And don't steal from us. Don't steal from the company, okay? Can they be transparent about it? Can they express themselves, okay, here are our strengths and here are our weaknesses, and this is where we like for you to help us. So management is key. The second is we want to find players in a sector that they can be the number one in their sector, which is fine, and then they can continue to grow. They can be number 10 in the sector, like we invest in Huat Phat. As long as there's a clear plan to be number one, to be the top player, and there has to be a reason how, whether they're the pricing strategy, whether it's an ecosystem strategy that they put in place, whether in the case of An Gung, they basically monopolize all the major customers in Vietnam. So when a major customer wants to produce 3,000 doors, An Gung is the only one they can go to because they have scalability, right? So
and quality too.
And quality as well. And valuation plays a key role. How do they view about us, right? Are they shopping us for the lowest value, which we don't like, or the highest value, which we don't like? How do they view our capital? Is it just simply money, or the capital comes with strategic value where we can add value to the business? So these elements come into play. It's not like picking the stocks. We're not,
And I'm assuming depending upon how long they've been in business is going to determine what level of support do they need and what type of partnership they're looking for.
Yes, the maturity of their business is very important.
Okay.
We find that companies that are in the early stage development doesn't fit our strategy. We find a strategy that's already listed and onto the stock market. Again, it's not going to fit our private equity strategy. We rather look at it as a value play from a stock. So, okay, we'll buy 5, 10, 15% of your business, your stocks, and continue to help you grow. But where our sweet spot is in a business that's generating about $5 to $10 million in profit, and they want to grow to $20 to $100 million in profit.
And is that a 2 or 3 year exit? You almost think about it in terms of a time frame as well, or no?
Yeah, a typical average time holding period is about 4 to 5 years.
Okay.
But by and large, if a company is doing well, we can hold to 10 to 15 years.
Yeah, well, I mean, Huat Phat is 14 years, 15 years or so.
But they have to get onto the exchange.
Sure, of course.
We do ask that they get onto the exchange. If not, we have a drag along with some sort of rights that have a minimum valuation that will help us exit in the 3 to 5 year time frame.
I just wanted to add to that. I mean, what COVID has done is laid bare business models. It's challenged assumptions we've had. It's challenged existing business models. And what it's shown is that there are several companies that actually can pivot very well and adopt to this new environment and actually do better out of it. So yes, there is a field of deals that we have put aside or no longer pursue, but then there are some really interesting opportunities that are, as we mentioned earlier, in spaces like education and healthcare that we're actively looking at.
A question came in. I'm not sure if this is controversial or not, so we'll find out. Has the government had to provide any funding directly to any of our companies? And actually, I'm going to add a follow-up because I thought the answer was no, which is, has the government actually provided funding directly to any companies in Vietnam?
Well, not that I'm aware of.
Yeah.
Okay, at least not in the companies we've invested. But though they have asked commercial banks to, one, lower the interest rate, because in Vietnam, the interest rates get reset every 6 months. So they've encouraged the commercial banks to lower the interest rate. 2, restructure the repayment of the principal component to the later years. So if your loan's a 3-year loan, so for the 4 or 5 months that you cannot pay during this COVID period, we'll add that to the end of your loan.
So that's a 3-year loan, and now it's 3 years and 4 months.
Yes.
Yeah.
So for during this period, you aren't forced to pay. So even if the business has cash, they're going to conserve it.
Yeah.
Right. So a combination of reducing the interest rate and restructuring the principal repayment to the later dates is how the government is encouraging commercial banks to help businesses. But we have not seen any situation where the government is actually giving directly funding to the companies.
No bailouts. And I think, I mean, if you wanted to look at this differently, what the government has done is actually spend a lot of money in public infrastructure. I mean, year to date, almost $10 billion US dollars. It's up 40% compared to last year. That spending in public infrastructure is helping companies in the material sectors, companies like Hoa Phat. And we've seen that reflected in the share price. In terms of sectors, materials is probably one of the best performing sectors year to date. In terms of companies, Hoa Phat, share price is up 50% year to date. So that's sort of where the government is supporting the domestic economy.
Yeah, so I think that the question certainly relative to what's happening in the U.S. where they're bailing out the airlines and the Fed's buying ETFs for high yield, nothing like that in terms of truly, the government is not kind of expanding its balance sheet, maybe another way of saying it, becoming an investor. Another question that came in, and Andy, this is going to be directed at you. Earlier in the conversation, we talked about kind of avoiding consumer discretionary stocks or the fast-moving consumer goods, mostly because of competition and maybe not very wide moats. Do you also expect weaker consumer spending, and is that predicated on lack of tourists, weaker domestic demand, or is it simply that the only reason you're avoiding it is just really because it's just a super competitive marketplace?
Yeah, well, before I answer the question, I just want to make sure that if we are still having microphone issue, if someone just type it into the chat room, say the microphone issue has gone away, because I noticed that there was some comments to that effect. Okay, so on the consumer spending side, okay, back to normal. Okay. Thank you, Felipa. So on the consumer spending side, we do believe the consumer will continue to spend. Okay, that is no doubt. Income per capita continues to rise. Like I said earlier, we're about 2,500 to 3,000 per person per capita average throughout the country, but in the city it's much higher. Yeah. So people are spending money. But you're right. Back to my other comment, the supply, the competition to provide food and beverage is tremendous. Okay, and it leads to the question of someone asking, what's our view on VinaMilk? I think a lot of people can read the analyst report on VinaMilk. The growth has been tremendous over the last 5 to 10 years. We have benefited tremendously. We invested in VinaMilk when it was $400 million in value. Now it's over $10 billion in value. So we've benefited tremendously from this. It's a great ride. But if you look at the report and you look at the projections going forward, their growth rate in terms of EPS and revenue growth is in the single digit.
Which is understandable. It's no longer a $400 million company.
It's math, right?
Yeah.
Your base is much higher and you're growing much lower. But also, if you follow our portfolio over the last 3, 4, 5 years, you'll see that our holdings in VinaMilk have continuously reduced over the years. So we have taken a lot of profit from the business, and I think that should reflect how we view VinaMilk in the coming years. And so we've been able to monetize or take profit in VinaMilk and reinvest that in other businesses that would deliver 15 to 25% return.
Yeah. So another question that just came in is related to privatizations. And so privatizations, I think a lot of people talk about it. It was kind of certainly very important and added to the market, added to liquidity. I think probably 2017 hasn't really been that much activity since then. Where do you see that going? We talk about new companies maybe being listed. I don't know if those you think about those as privatizations or just really going public. But where do you see kind of more privatizations, or do you, and what would the time frame be?
Yeah, I think when we talk about privatization or equitization, we are referring to the fact that a company on day 0 is owned 100% by the government. On day 1, the shares are being auctioned or provided to the private sector.
Would the banks that might file be in those privatization areas, or not really?
No. Okay, the only bank that's left that would go to an equitization is Agribank. Okay, all of the state-owned commercial banks have been equitized.
Okay.
Now, those state-owned commercial banks, you can say that the government still owns a majority, and they will continue to sell down the shares as time goes by. That will continue to happen. But the equitization or privatization is only for companies that day zero is on 100% owned by the government. And the day one is when they start selling to the private side and allowing management to buy. That's the definition.
And how many decent-sized companies are left like that?
Yeah, so when we started this process in 2002, 2003 timeframe, we're looking at about 14, 15,000 companies.
Yeah.
Now we're probably down to about 2,000 to 3,000 companies only.
And how many of those, there's the difference between 2,000 to 3,000 exist, and then how many, as an active portfolio manager, do you really want to say, I want to, as a steward of capital, actually invest in that for the long term?
Yeah, our track record when it comes to participating in these equitization is probably about 5%, right? So for every 100 companies that come about, we probably do 5. And there's an art behind why we do it and why we don't do it. And obviously, most of the time we don't do it.
It's 1 in 20. Really.
Yeah. So the key to the equitization is obviously understanding the business, but also understanding where the value is being unlocked. And the only people that knows where the value is being unlocked is management.
Yeah.
And if we see management, we get close to management before the equitization. If we see management completely excited about owning a piece of their own business, we get excited.
Yeah, well, and it's interesting because I guess what I would say, just as a follow-up, it is there might be a new wave of privatizations, may not actually matter in the portfolio, because it's really about the quality of the privatization, not just the concept that it's happening.
That's right.
Another question that's coming in, and I'm going to read this one verbatim. Given the heightened competition in food and beverage, do you think that modern retail in food and beverage can be key beneficiaries in Vietnam?
Yeah, modern retail is a big component of why competition is getting more and more, because they facilitate the ability for newer businesses or even international businesses to come to Vietnam and put their products on the shelf.
Is this better for consumers though, or better for investors?
It's completely good for consumers.
Yeah.
It's like, Alibaba and Amazon is great for consumers. But where are the suppliers? They're competing with each other with gross margins that are getting thinner and thinner, right? So yes, for the consumer, it's great. So when it's good for the consumer, that means the modern retail benefits from that too. And modern retail, you have to look at how scalable they have become. If they are a scalable operation, they are able to determine the price and the margins to move the products in the market. If they're subscale, they will die. Simply because they're going to be holding on to too much working capital. And in Vietnam, working capital is extremely expensive because the bank debt, interest rate of the bank, you have to pay 8, 9, 10%. So you become the bank. If you have a large amount of working capital, you're going to get in trouble, right? So you need a scalable operation that turns the inventory significantly to be successful. What we're seeing now in Vietnam is there's a lot of convenience stores, a lot. You have 7-Eleven, Circle K, a lot of them. And we struggle to understand how they'll be successful because one, competition is so much.
You don't need 3 on every block?
You don't need, well, you can. I've seen it in major cities. But the real estate price in Vietnam is tremendous. And the spending power is significantly below that of Tokyo, New York, or what have you. But the real estate price to rent these facilities, these locations is really high. They're Singapore level, in New York level. But you're not getting the spending power that you would see in all these countries.
So, we're getting close to our 90 minutes, and I want to be respectful of everybody's time. KB, any closing comments from you as we kind of wrap this up?
I'm just going to say thank you. Thank you to our shareholders. Thank you to our advisors. It's been a challenging year. We would welcome you next year here to Vietnam. That's what we look forward to.
Andy?
No, I hope everyone stays safe. We have been very, very fortunate, knock on wood, that Vietnam has been a very safe ecosystem for us at the moment, and we continue to search for good companies. And when the COVID pandemic is over, we hope that Vietnam is positioned fundamentally to ride the wave of growth in the global economy as well as the domestic economy.
Terrific. Well, everybody that dialed in or zoomed in, I should say, thank you very much. A couple of comments. This video will be, I guess, downloaded. We'll put it on our website, hopefully in the next couple of hours. So if any of your colleagues weren't able to dial in, I know we're doing this across multiple time zones and multiple continents, please share this with them, VinaCapital.com. And again, on Thursday of next week at 3 p.m. Vietnam time, we will have folks from our traditional equity and fixed income platform talking about the market, updating on the portfolios. And that's our offshore funds platform with our UCITS in our Cayman portfolio. So again, on behalf of our VOF team, Eric Levinson here, just want to say thank you so much and see you next week.